And we're on.
We're live. So, welcome to Mortgage Tribe TV. This is our first ever episode going live. So I'll introduce everybody, or I'll let them introduce themselves. So, who are you, Neil?
I'm Neil. I am Neil, part of Dan and Neil. Do you remember when that guy we bumped into the other day went, "Are you Neil from Dan and Neil?" I went, "No, I'm Neil from Neil." Neil. But yes, I am Neil, 50%, 51% of Dan and Neil estate agents, covering South Reading, world-class estate agent. Let's go.
And then we've got the lovely two chaps, Tom and Ves. So, who are you?
I'm Ves from Ves and Tom. I think it's widely known as. My name's Ves. I'm from Mortgage Tribe. So I think everybody that will be watching from our page will know who I am. So yeah, thank you for the intro, Tom.
Yeah, I'm Tom. Just to speak on Vez's behalf, he's literally just had a root canal about an hour ago. So if he's speaking a little bit weird or goes a bit quiet, I think we'll give him the benefit of the doubt and let him just chill on the sidelines for a bit. But yeah, I'm Tom, Vez's business partner with two of the directors at Mortgage Tribe. Yeah, we sort of run the day-to-day of it, and we love what we do, and just trying to sort of do a few more things like this to raise awareness and just give a platform for anyone to answer or ask us any questions and for us to answer them, really.
Yeah, and that's exactly it, isn't it? We thought we'd go live pretty much, I think, every Thursday, we've said, in the evening. So hopefully people watching this or seeing this afterwards know that. And we'll be just answering questions, going through what's going on in the market, cutting out all the jargon, as we say, that people don't understand, and hopefully make things a bit easier. So shall we get straight into it? Because we've got a couple of questions we want to go through.
Let's do it.
So you're both going to answer this one, I reckon. I've heard from Ves, who mentioned this before we went on air, that rates might be going up, which I thought was surprising. So what's going on, Ves?
I think the main thing is that these predictions, they're always speculative, and they're always looking at the kind of precursors to rates going up or down. So one of those precursors is swap rates, which is effectively the rates at which lenders lend to each other, and that's always kind of a precursor of what their headline rates are going to be looking like. So they went up yesterday, I think it was. So naturally today we've had a couple of emails from lenders to say we're pulling certain products, we're going to have a rethink, and then come back. One lender said they're pulling tomorrow and come back on the 15th. Coventry Building Society already pulled on Wednesday. So there's a bit of movement, and it's not going to continue to go fluidly down. There's going to be slight sort of peaks and troughs, and it's going to move in a sort of less linear direction. But hopefully from a borrower's perspective, this isn't going to be sort of fatal as such. It's not going to make a huge difference. Those are going to be kind of minor tweaks, but it is attention grabby, isn't it? The fact that rates have gone up a little bit. So
certainly, because I think, Neil, you'll say, when we heard that rates might be going down at some point soon. We're hoping.
Yeah, I was going to say to the two gentlemen, is that more so just because we've had a bit of a dare I say it, an easy ride for the last few months, where they have just ever so slightly been going down, and everyone's kind of had that nicety, and then suddenly a small tweak is flagged in people's minds? Would that be what it is? Whereas, as Ves said, it's probably just going to be a little trickle up and maybe down. I don't know. But
I think nothing's ever linear, really. It was never going to be just a straight line that rates is going to come down by X amount each month. There's always going to be ups and downs, and we say this quite a lot. But lenders sometimes, when they're just too busy or their service levels aren't at the level that they're trying to achieve, they will just put rates up a little bit just to stop the flow coming into their underwriters. So that happens a lot. I think for the last sort of 2 months, it's been really sort of good news. Rates coming down. The minute a couple are going up, it's just something to sort of write about. But I think everything's still very, very positive. And like I said, it's always going to be a little blip. It's never going to be a straight line going down. and we're in a hell of a lot better position than we were 2 years ago, or dare I say 12 months ago as well. So I wouldn't want to get into the reasons why. I think there's, I don't know, we were talking about earlier, apparently some oil thing that made a few people get a bit scared. I don't want to go into that, but that's you can Google it. I'm sure you'll find something. But you know what? Talk to me in 2 weeks' time, and we'll see that they probably come back down. So here we are.
Ian's asked a cool question. I think we'll all have a different answer to this. We'll all try and answer it in a couple of words. Is today the cheapest day to buy a house?
Over to Dan and
Neil. Yes, I would probably say. The reason being is, in my experience, even though the market's probably stayed more level over the last 18 months, that it's probably going to get a bit busier, and probably prices may go up at the start of the year. It's all relative if you're moving within the market. But yeah, today may well be the cheapest day you could purchase a home.
Yeah, I definitely agree. I think that there's still buyer demand and activity out there. It's not like it was 3 years ago where you had to pay well over the asking price to secure it. So yes, houses are still selling quickly, but I would say the prices aren't being pushed as high as they were. So yeah, I would say it's cheapest currently, and ultimately this time of year there'll be a bit more activity where people want to be bought and secured for Christmas. So yeah, you just got to play that demand at the same time. What's your view, boys?
Another question as well for you boys. So Rob's asked, so thanks for the question, Rob. What lenders are good for first-time buyers? I'm sure you could probably both reel off a couple that are pretty decent for people to go to.
Well, I mean, definitely Nationwide. It's been highly sort of publicised. They brought out a really, really great scheme called the Helping Hand Scheme, where they'll lend up to 6 times your income, depending what your outgoings are. Obviously, lots of terms and conditions. That's increased from 5.5 times, which was a good proposition anyway. A lot of lenders are coming under the radar, sort of following suit. So Halifax are doing the same thing. They're calling it an income booster, but it's for first-time buyers only. Accord are doing the same thing. And I think we'll see a few other lenders coming into that market. I think they're letting Nationwide sort of be the sort of the ones to try it first and see what happens. The only sort of main sort of T&C on it is that you normally have to fix 5 years. It won't be available on a 2-year basis. But they are giving a significant increase into what they'll lend, which is great for first-time buyers. So, Rob, if you want to have a chat with us, get in touch with Ves or I will happily help you out and point you in the direction and show you what lenders are offering.
Cool. All right. So, on to the next topic. It was one I thought of and I thought might be interesting for people to listen to, because we put, don't get fooled by headline rates. It's meant to have an S on the end. Because we do publicise it quite a bit. We hear about some really cool rates that pop up, don't we? I think the other day there was some sub 4%. I don't know if that was over 5 years or some. Tom mentioned there was one that was 4% or just under over a 2-year fix, but don't get fooled by it. Why wouldn't we get fooled by that rate? What would you both say? Go to Tom first, then to Ves so he can rest his tooth.
Well, when I say fooled it, there's a lot of different elements to it. It depends, how much you're looking to borrow. Because if you're looking to borrow, for argument's sake, less than 100,000 over a certain amount of time, then you might actually be better off going for a higher interest rate that has a lower product fee or no product fee. Some of the rates that you see might have a £1,500 fee, whereas actually better off to pay a very slightly higher one that only has a £1,000 fee. And the biggest one is a lot of these headline rates, you need a 40% deposit to get them. So, it's just always worth just speaking to a broker and just looking into a bit more detail as to, do you fit their eligibility criteria in the first place? And is that rate that's being headlined actually even applicable to you? Hopefully it is. And, we'll always try and get you the best deal we can. But if it isn't, we'll point you in the right direction as to what is the best rate. And again, it's down to us as advisors to get to know your situation better and be like, is a 2-year the best? Is a 5-year the best? What terms? All that kind of thing. So it's more, don't just go for the headline rate, because there's lots of different factors in that equation that goes into it, really. But I don't know what you think, Ves, on that.
Yeah, just to add to that, I think, spot on, really. I'm going through a remortgage myself at the moment. So it's I can use my situation to illustrate it, but for us, the lowest rate isn't the lowest cost solution. So that's something that I think people always forget, is that those very, very lowest rates are always a lot of the time tend to come with a large booking fee. So when you factor that in, depending on the loan size and other circumstances, the loan term and a few other circumstances, then all of a sudden there's other factors in play that may mean the lowest rate isn't the cheapest. So it's always quite an interesting one to explain to people, and people get caught out by it when they're looking at websites like USwitch or those comparison websites. They'll often arrange by lowest rate first, and then might get caught out by a large booking fee or something else that makes that product slightly less desirable. Perhaps it's missing a large cashback facility that a different product has, and it's not been taken into account. So there's nuances and complexities to how we source, and I think it's always good to just, if you've seen something, by all means ask your mortgage advisor, am I eligible for this? And the chances are they've seen it as well, and you're not. So but ask
we're willing to be enlightened, aren't we?
Yeah. If you've seen something we haven't,
I think that rolls quite into that next question, to be fair, doesn't it?
Well, yeah. Thanks, Ryan. Yeah. Why is it important for a buyer to use a broker than to go direct to their bank? And I'd probably say from a first-time buyer's point of view, is quite important for that as well.
Can I put my 10 P's?
I was going to say this. I want to hear. It'd be interesting to hear you guys, as in your role, what you think about that.
Honestly, whenever I register a buyer, I would always ask the same sort of questions, ascertain their position and what they've done. And my question around what they've done financially is quite simply, what have you done to prepare your finances? Have you gone direct, or have you spoken to a broker? And I say the same thing every time, which is brokers are worth their weight in gold, in my opinion. Decent solicitor, decent removal firm, obviously a decent estate agent, but a broker, in my opinion, is worth their weight in gold because of that reason why, obviously, you guys just said, and you'll probably elaborate in a minute, but being able to shop around from an estate agent side of things is being able to qualify them in a much better way when they come to making an offer on a property. If they're prepared, I know Dan and I we're always banging on about buyers being best prepared to offer on a property, because if there's 6-7 offers on one house and you're the one that's got all your information, you've got your decision in principle, but you've attached your broker's information, we'll be doing our due diligence and putting a call into that broker to just say, look, does this fit okay? Are you happy with this? Because a bit of paper is all well and good, but speaking to the person that sits with their finances is much better, in our opinion, when negotiating an offer.
Yeah, and if I can add just one thing to that you mentioned decision in principle or agreement in principle. People listen to this, you probably hear the DIP, DIPS, AIP, all these random acronyms that are thrown around. But for us, generally speaking, when we put an offer forward, we would much rather speak to their trusted advisor they've worked with who got their figured, rather than a bit of paper that says what they can afford. I'd rather speak to their broker that says, yeah, we've seen all the finance, we've done all the pre-work, and we know that they comfortably can do their offer at X. And it's not about knowing what they could offer on a property. It's more about securing that they're capable of making the offer they want to, and filling our sellers with that confidence, which I think is really important. So, what would you both say on that, Tom and Ves?
Well, we actually talked about this in a bit of content we did the other day, didn't we? But we're all sort of here to sort of work for our client at the end of the day and help them get what they want. We do speak to estate agents because they'll call us to get some verification on, is his offer valid and is it doable? We're never ever going to say what that person's budget is, because at the end of the day, it's worth what that person thinks it's worth. All we're ever going to say is, yes, they can do that, or no, I don't know what you're talking about. That number's out of the equation unless I've missed something. That's kind of all it is, really. And that just helps everyone, at the end of the day. So yeah, we're never going to be giving away people's budgets or what they can afford or what they earn, that kind of thing. But what I will say, just to answer Ryan's question directly, very, very quickly, is we just save people a hell of a lot of time, in my opinion. We can find out pretty much every lender's affordability in one form, rather than the client going directly to each lender, which, say if you went to just 5 lenders, that's 5 different affordability calculations that they're going to ask. We can do that in one. We do a fact find and get all the information that we need to process an application for them. If for some reason something goes wrong with that first application, we've got all the information on file to then put a subsequent application in, rather than that person having to make an appointment with another lender, so on and so forth. So it saves a lot of time, stress, and hassle is the short answer to that question, Ryan.
Cool. Anything to add on that one, Ves? I think we've all covered that.
No.
That's right. Too starting to hurt, isn't it?
Too starting to hurt. If you haven't just joined us, Ves has had a root canal, and he looks like a chipmunk on one side of his face.
He's feeling it. I think I don't know if you mentioned there about when rates are sort of live changing as well, rather than if you've gone direct. And obviously, I'm not the advisor here, but I've noticed that in the past where you would have got a product and you're fixed into that product because you walked into that lender or that bank as you done. Whereas you guys, and I've had it in the past, will turn around and go, actually, I can get you a better rate now. I can do this for you. So I think, the idea of saving money is always
Well, and also you've got to remember, as brokers, a lot of us are kind of, if you're employed or self-employed, you're still kind of an independent entity in a way, is that you want to build up your profile and your trust amongst other clients. So most of our new clients come from existing client referrals. We just want to do a good job for someone at the end of the day. And I always say we don't get what we want unless the client gets what they want in terms of actually getting the mortgage that they would like. And at the end of the day, getting the dream home that they're working hard for. So we're always going to do our absolute best for you. So, Mortgage Tribe, we're a new company. We only started earlier this year. Ves and I have been in the industry a long time, but we're really passionate on building this business up, and we're going to do that by doing a good job for our clients. So we'd like to think there's a mutual benefit for both us and a client to get what they want. So we always put that at the heart of everything.
I think that's great to hear, because I know in one of our chats this morning, Dan, one of the guys sent in a video that was all about branding and how amazing your branding can be. But if you're not there and contactable and thinking of the client most importantly, then the brand goes by the wayside. So that's awesome to think or know that you guys, the client is the key factor there.
Yeah,
awesome.
So this is the last point we were going to cover, and then we got a couple more questions which I'll pop up as well. But this is really, really interesting. I think Neil's got a couple of cases like this potentially at the moment that might be happening. But it says, should you wait for a different rate when buying? So I think what we mean by that is if you're going through the process, you're buying a home now, you fix your mortgage rate, and then you think right at the end, there might be a slightly better rate. What do you do? Then I think you guys have got some really interesting answers to this, haven't you?
Yeah, I think it's
Hope.
No,
yeah, we definitely do. Ves, I think Ves is mine. I know what you're going to say. So yeah,
you work with what you've got at that time, right? So what do lower interest rates typically mean for the property market? Higher property prices. High interest rates mean obviously maybe a plateau or a slowdown or a decrease in property prices. So you sort of look at the information and you look at the market. The only time I think we'd really say to people to wait is actually if their personal circumstances probably aren't quite right, whether there's some kind of poor credit history there, or whether their situation just dictates that they would be stretching themselves too much by taking out this mortgage. If it's affordable at the time of taking it out, we would advise to just proceed with it if that's what they want to do and buy a house. We wouldn't say, well, wait 2 months because it might be lower, because as you've seen at the start of this video, you never know what's going to happen, right? Tomorrow swap rate might go through the roof, and because something happened halfway across the world, or actually some economist somewhere has turned around and given a gloomy outlook of X, Y, and Z economy, and all of a sudden then you've got an awkward conversation with the client to say, well, you told me to wait and now I can't. So if it's affordable at the time, if there's a good suitable product there for you and your advisors found that for you, they've qualified you for that product, they've done the affordability calculations, it suits you, then go for it. Go for it. If that's your aspiration, is to buy a house, go for it. There's really, as people say, there's no perfect time to buy a house.
I've got a question then on the back of that though. So let's say I'm buying a property, I've made my offer, I'm a first time buyer or a home mover, I've gone and got my mortgage rate, and I've got my mortgage offer in the first 3 weeks of that process. We know that it takes sort of 10, 12 weeks to maybe for a home sale to go through. Tom, you're my mortgage advisor. Mortgage rates do come down, and I've got what would happen? What would you be able to do? Is it something I can change, or am I stuck with what I've got? If it's
no, following off what you just said, the first thing that we would aim to do is get you a mortgage offer. So that way we know you're proceedable, and that takes a lot of pressure off you. The lenders have made it very easy now for us to change what's called a product code. So basically, if let's say you fix in for 5 years, when we do your application at, let's say 4.5% for argument's sake, and then house moving takes quite a long time. Let's say 6 weeks down the line, it's getting a little bit closer to exchanging contracts, but you're not quite there yet, and there is a lower rate available. It's very simple for Ves writers to go back to that lender and say, look, this is still proceeding, but can we just change the product code on this case? And some lenders might ask for, they might rescore an application, but I literally had one for a client today where they said, yeah, we might rescore this, which basically means they'll do a new credit score check. And then that's just down to the client if they want to do that or not. Luckily, this client did, and it was all fine, and they've got themselves 0.3% better because that's how much their rate has come down, probably in about a 6-week period, maybe more actually. So yeah, what we always advice to our clients is let's get the application in ASAP, so we know there's no hiccups down the line. We don't want the pressure to be on our client holding up any kind of chain because they've got their mortgage offer. Let's get it in, let's get the application in and underwritten. Let's get you a rate fixed in, and then if a lower rate becomes available, we can select that pretty quickly.
Yeah, amazing. I think me and Neil we were talking about this the other day, and there's, from our point of view as agents, Neil, I'm anything to add after this, but when you're buying a home, you've got your mortgage advisor sorting everything out, we almost want that to be done quite quickly in terms of getting your mortgage booked in, your valuation booked in if it's needed, and that mortgage offer, because your offer really is only as good as you ended up with that mortgage offer. So if you were to wait 2 months, I wouldn't expect the seller to stay with you as a buyer, because it would cause them, I'm sure, lots of anxiety and stress because they don't actually know if you've got it. At least if you secured it and locked it in and you happen to get a better rate, then that's fine if it works out for timing. But I think if I'm thinking for myself as a seller and I was selling my home to someone with a mortgage and they didn't actually go and get the mortgage fully sorted, I would feel really nervous.
Well, how keen are they as well? It's let's get the ball rolling.
Would you agree, Neil?
Yeah, absolutely. I know we've had a few cases, and the first thing, Dan, you probably do the same, but the first thing I say to people is, great, your offer's accepted, memos are out. Next thing is to pay for your searches and get the full application done and get your valuation done straight away. Because the seller is probably sat there going, like Dan said, you're not really eligible to buy this home until the lender says, yes, we'll lend you that money. And it's peace of mind for everyone involved. And I know whenever I see a mortgage offer come in, I'm like, yes, that's a big chunk of the puzzle. So
it's a good moment, even though you shouldn't be nervous about it because you've done all your pre-checks. It's always a nice one. Like, yeah,
they are good. Yeah, they're good for it. Yes,
it's a big milestone, isn't it? I think from a buyer's point of view, a seller's, and our point of view, and everything, the mortgages, everyone, it's a nice milestone to hit. A bit of security, that bit's done, right?
Yeah, 100%.
Okay, so we've got a couple of questions to finish up on, guys. So quick fire ones. Clint has asked us, can you guys do the more complicated ones? I think he means cases like buying through a limited company or bigger landlords, etc. So short answer to that one is hopefully yes.
Yes.
Yeah, absolutely. Yeah, limited company applications for buy-to-lets are becoming more and more popular, I think, just because there's certain tax benefits to it. And more lenders are coming to the limited company market. So yes, in the short answer is absolutely. Bigger landlords, people got portfolios and that sort of thing. I think a lot of the sort of bigger buy-to-let lenders are really, really keen to help those landlords with portfolios. Especially me and Ves and I had a meeting with a BDM from TMW the other week or a few months ago now, and he was sort of telling us about their new proposition they've got for portfolio landlords, because they're willing to help a little bit more with those clients, because at the end of the day, they'd love to get their business with other with their other properties that they've got. So always worth having a chat to us, because you do sort of fit into some more niche criteria, but the criteria can actually be really good.
Why is it, and just this is my question, I didn't write it in the comments, so I apologise, but why is it just the tax benefits? Because I've had loads of people where they'll come and view a house, it will be Mr. and Mrs., and then they'll make their offer under Mr.'s name, and then suddenly it's Mrs. buying it, and then suddenly it's going to be put in a company name and 2 directors. Is it just all that rigmarole, obviously, for the tax benefits of it, or is there other options available for them?
The short answer is yes, because the rent will be taxed at corporation tax rather than an income tax bracket. But there's a lot of caveats to that, and you should definitely speak to an accountant before you look at the limited company route, because the downside of it is that, obviously there could be fees to set up a company. You've got to do a set of books each year. Sometimes the interest rates for limited company products are a little bit different as well. So there's a lot of factors that come into it. But if you've got a good accountant, they'll help you make those calculations.
Okay, makes sense.
Okay, we are 2 more questions. We've got Sherko's asked.
Hello, Sherko.
Hi, Sherko. He's asked Ves, I think. I'm just going to say Ves. How many lenders can you access?
So I think officially our panel's got about 96 at the moment, and that number changes quite often because they add new ones in quite a lot of the time. And that's just our panel. We can go off panel sometimes and go to certain lenders that might not be on there for cases where they might require something a little bit more specialist, or there might be a better solution elsewhere. And we have a process for doing that. And I think Tom's done that once or twice recently on cases that we've discussed. But 96, it's as good as you're going to get, really, in terms of market access. I think some brokers still use the term whole of market. We stray away from that. It's kind of a contested term, really, whether you can use that or not, because nobody really is whole of market, but we are as much access as you can reasonably get.
As whole as it can get, I suppose, is the right answer. Yeah.
One question on breaking down in layman's term. Obviously, I've done this for a long time, but what do you mean by panel and non-panel? I've picked a big panel in your office, and you're right.
Yeah. So we subscribe to a network. Most mortgage intermediaries do. So ours is a company called Home Loan Partnership, and they basically give us access to a panel of lenders, which is as close to whole of market as you can get. But it does go. They deal with all our compliance basically, and they almost, you could argue, get you a seat at the table with the lenders. So that's what panel means basically. We are kind of down to what our network has, but luckily we're one of the biggest networks in the UK. They subscribe to Legal and General Mortgage Club, which is the biggest mortgage club in the UK. That's basically what that means in a nutshell, Neil.
No, it's good. I've seen it sort of happen live in front of us, where you're looking at the panel, dare I call it, and looking at all the lenders. So it's just good to break that down.
And we've got one last question. Now so we said we'd try and keep these to between 20 minutes and half an hour, and I feel like this question might have an answer that could be a bit longer. So we'll touch up on it, but actually I think this would be a really good one for us to go through. Well, no, I was thinking this could be a really good topic to go through in one of our chats, couldn't it? Because it's actually really, I want to know more about this. This could probably take our whole half an hour to go through some of this. But thanks, Matt, for asking this. Could you explain how porting a mortgage works? Is it possible to use a different lender for any additional borrowing? And then off that, there's probably 100 questions in my mind now about porting mortgage. Can you top this up? How can you do here? There's loads of stuff, isn't there, guys? I'm guessing.
There is, yeah. I mean, I'll start off, and Ves can add a few bits in, save his too. But porting basically means you're taking your existing mortgage on your current property to a new property, rather than redeeming it and taking out a brand new one. Now, normally the biggest benefit of that is you're going to avoid an early repayment charge. If you're in a fixed rate and you redeem that mortgage, you'll pay quite a significant fee to do so, depending on how long you've got left remaining on your fixed rate term. So that just eliminates that early repayment charge. And also, if you're on a really good rate at the moment, you can keep it. And then the additional borrowing is still done with that same lender normally as a top-up mortgage. So you will almost have two mortgage parts in one. So it's basically taking the current mortgage with you and then topping up on another product. You can go to a different lender for additional borrowing two different ways. One, you could just redeem that current mortgage, go to a brand new lender. We'll do the maths for you. If there's like a really, really good rate and you're stuck on a really high rate, we'll work out what your early repayment charge is. It might be worth just taking the hit in the short term and doing it. Or to get even more complex, you could port your current mortgage and then go to a second charge lender and do a top up there, which is rare. That's worth doing, but depending on your circumstances, it might be the only option you've got. But yeah, that's our job to do the maths for you. So come to us, we'll have a chat, find out what your current rate is, what the current fee is to get out of it. And also, can your existing lender lend you the amount you need? That's the key. If they can't, then you might have your hands tied. You've got to go to a new lender because they'll lend you 50 grand more than your current one. That's about as short as I can make that answer, but I don't know if you want to add anything there, Ves.
No, I think that without sort of turning this into an hour-long episode instead of a half an hour, a really good way of summarising it. There are some again complexities to those applications, and I think where it gets really confusing sometimes for people is that different lenders have different online portals and different ways of submitting those applications, and sometimes those applications are not tailored to porting, they're tailored to new business. So porting, when you're trying to do a porting application via a lender's portal, it can require you to do a little bit of homework before you start keying that application. Otherwise, you're going to get yourself automatically declined, or you're going to do something that the lender hasn't explained particularly well. And it's not really your own fault, but you're not going to get the outcome that you're looking for. And I see that quite a lot online of, I thought my product was portable, but my lender's declined it. So what's gone wrong? And something is usually something that there's like I said, like a complexity with the system, or something that we're likely to know, or if we don't, we'll do our research on beforehand. So I just say to people with that, just be really careful. Even if you're not shopping around on the market, if you're thinking, I'm just going to take my product with me, I'm going to take my low interest rate, move it to the new property, and I don't need to use a broker or an advisor because I'm not looking at the rest of the market. Just be careful with the application. Like I said, there are some complexities there that could trip you up and just cause you some unnecessary distress during that already quite stressful moving process.
Maybe
Very
that's
good question, Matt.
Yeah, maybe that's something we'll cover.
We'll do a piece on that, definitely.
Next one, right? That's a really, really cool question. There is one more question. We'll skip past it. I think I just want to have a funny answer for it. I don't know what you guys think, but you might not be able to say. What's the biggest mortgage products you put through for a client so far? I don't know if you're allowed to say that. Any celebrities? I was going to say you might if P Diddy gets out of prison, you might need a mortgage. He's not cash anymore, is he? So,
yeah, he didn't send me his pay slips when I asked him.
Oh damn.
There was a lot of baby oil on the bank statements. I don't know what that was all about.
This is actually really interesting. We were talking about this with Mike Robson the other day, actually, and he had a really interesting theory that people buying over a certain property value don't actually need a mortgage. And I'd love to see the stats on that because I think he's probably right.
Yeah.
And
how many people do you think get mortgages on houses worth $5 million?
Yeah. That could be one for the investors' corner. I think off the top of my head, the biggest mortgage I've ever done is, I reckon, 1.4 million, which they're rare for the reasons that me and Mike were getting into. A lot of people, once they get over a certain amount, they're pretty cash rich.
Yeah, you've got to earn a serious amount of cheddar to get a £1.4 million mortgage. Exactly.
But you go through to the old Premier VIP department where the banks frankly can't wait to lend that sort of money, if they're allowed to say that.
Yeah, it's always nicer to deal with the lenders when the loan is over a certain amount, let's say $500,000, because as Tom said, you'll get allocated a special contact. They'll constantly be on you to say, is everything going okay? Can we help you? And it's always makes our job a little bit nicer, because usually, if you've got an issue, you can instantly get through to someone. Otherwise,
They
you
can't
might
wait to lend it, can they? I suppose
Start
they
doing
can't
that.
wait to send that money out.
Yeah. So otherwise, you might end up spending a bit of time on hold, which is never fun because the hold music is repetitive.
Hi guys. Well, really good chats. Just 35 minutes. I've got one last question for you that you're probably not interested in, but England do play at 7:45 tonight against Greece. What's your score predictions before we sign off?
0-0.
I was literally
All
going to
fest.
say boring.
I'm just going to play it 4-0. 4-0 England.
I'm going to join you, Ves. I'm going to go 3-0 England. Why not? I think they're playing better.
Drop your comments. What do you reckon?
What do you think, Neil?
Me, I'm going 0-0. It's going to be boring.
0-0 as well.
Yeah.
Clint's gone for a 3-0 England. Yeah, I think England are playing much better already without Southgate, because I'm not going to turn this into a football podcast, but Southgate was rubbish, wasn't he? I know he got us to a final, but he messed it right up. So for me,
You're one of them.
Always
Right.
surprised me.
Thank you so much for everyone who's watched. And this will be going back out as well, as people can see this again. If you've got comments, you want to ask us any questions for the next time we do this, which will be in a couple of weeks, then please pop them through to our social accounts. We'll put them through, and we're more than happy to base our conversation around that. And yeah, thank you guys for joining us and making this a thing we're going to move forward with.
Yeah, cheers, guys. Thank you.
Thank you, guys, and thank you for hosting.
Good day with it too.
Yeah, cheers.
Thanks to Greece, by the way, before we sign off. Cheers, mate. See you later.
Cheers.